that is sustainable finance and ESG, aligning financial strategies with global goals. For this, I would request Ms. Dipakshi Khaira, Vice President and Head Customer First, Bajaj Allianz Life Insurance Co. Limited. She is a Vice President and Head of Customer First at Bajaj Allianz Life Insurance and has spent over 20 years in customer experience management, service delivery, strategic planning and business transformation across the BFSI space. She has worked on prestigious citizen experience projects with the IT Secretary of Delhi and Ministry of Consumer Affairs. She has been an industry advisor for Tata Consultancy Services and was heading customer service for Snapdeal.com in her erstwhile role. Can we have a huge round of applause for Ms. Dipakshi Khaira?
Thank you, Mitali. Good afternoon, everyone. So, I'm going to start with a very key question here today. Talking about sustainability, talking about the planet, and what is it that we want to do to make a difference. The key question is, if I was to ask you that would you be willing to invest 10 lakh rupees to ensure that your child gets absolutely pollution-free air? I think most of us would be okay with it. So I think that is the question that we are trying to evaluate here, sustainability. Sustainability in our financial decisions, sustainability while doing business, which is a very key and a vital framework that has been introduced into businesses today in order to address some of the very key and critical hazards that are posed to us as businesses, as people, as human civilization. Just to give you a perspective, I'm going to quote a few numbers. So, the emission from carbon dioxide today in the world yearly is about close to about 50 billion tons. And India, fortunately or unfortunately, happens to be a leader in that space with about 8% contribution to that carbon dioxide emission. Of course, China and the US leading. But one of the things that we want to focus on through sustainability is reducing our carbon footprint. So today I'm going to be talking about sustainability and ESG in our financial space. Now, a couple of years back, I think we all realized when it happened to the air quality, for instance. I think we have a lot of discussions on air quality index in the capital. So for example, the average air quality index is supposed to be around 100 to 250, which was around 1600 in Delhi earlier this year, which is a cause of alarm, right? For all of us to wonder that is it important, is it the right time to have that kind of decision making within our businesses? Now, whether we look at manufacturers, we look at investors, or we look at consumers, I think it has become absolutely important for all of us to look back and understand that how is it that we can make a difference in all of these three spheres. Can we create a happy planet by small little steps that we want to take right from our households to our workplaces? So coming to ESG, which stands for environment, social and governance factors, we'll be understanding a lot more about how to introduce them in our financial space and how to make the right kind of investments to be able to create a happy planet, a happy workspace, a happy workforce, and governance factors, which talks about stakeholders, salaries, compensations to stakeholders, compliances, and regulations. So I'm going to be covering all three of these for all of us. So like I said, sustainable finance is basically prioritizing doing business in a way that helps the environment. And as investors, today investors not just look at the financial reports of organizations, but they look at the sustainability, the ESG metrics of organizations before investing. Also, what's happened as we see a change that the generation today, and I'm going to be sharing some numbers eventually with you, the generation today is extremely sensitive and cautious about the kind of investments that they make. So for example, reusing and recycling resources are the organizations that we are investing in into the renewable space or not. And we traditionally now we are seeing that the attitude is moving towards organizations where reusing, recycling, waste management, pollution control, the generation today is investing in organizations that are heavily investing in these spaces. Okay. So just to get a little contextual, ESG is a framework that basically helps all the stakeholders understand that how are the risks being managed and how ethically are we doing business today. Like I said, it's environmental, which largely talks about renewable fuels. How are we utilizing renewable fuels? So just to give you an example, we've been evaluating that the source of electricity, that where electricity gets produced from, can be moved to solar panels, and not just solar panels within the house spaces. We're talking about solar panels within the commercial space, right? So can commercial electricity be moved from the traditional electricity sources to renewable sources of energy? Okay, that is a thought to be evaluated. How can our carbon footprint be reduced? How can we minimize usage of air conditioners? Those are some of the things that get evaluated when investors look at investing in organizations with an ESG metrics. Now, we're talking largely, just to get back to give you some examples on implementing sustainability in our workplace, and I think a lot of us actually do that in our workplace today. If you see, can we walk it to work, right? This is something that we constantly talk about. So I come from a city where the AQI is a lot better now. So I come from Pune, and a lot of people coming to work today are using bicycles. Okay. So I think that is a very interesting step towards managing environmental hazards and reducing pollution and reducing the carbon footprint. Can we have green cleaning supplies, right? Are we donating? Interestingly, I see that recycling computer equipments or e-cycling, for example, is becoming a trend that's catching up big time. Do we want to stop usage of paper? Yes, I think all of us somewhere are doing that in our own ways. So that's very important. Plastic-free campaigns and reusing cutlery, etc. in our workspace. So I think those small little steps that we want to take as an organization is increasing confidence in investors while investing and evaluating whether an organization is eco-friendly. Okay. So I'll also take you through some of the metrics that are being looked at in the industry that investors are looking at. And this is not just about investors, it is about manufacturers, it is about consumers like us, right? Taking those small steps towards ESG. Now, while I've talked a lot about environment, and I think all of us are pretty aware of what needs to be done when we talk about the environmental pillars, achieving net zero emissions has become a very critical regulatory requirement for banks. And I think this has started from the European Union, where a lot of stress is being put into minimizing net emissions and having zero carbon footprint. Moving on is the social pillar. Now, when we talk about social pillar, interestingly, we talk about diversity. In the recent times, I understand that there is a lot of focus on increasing diversity with organizations talking about a healthy mix of male-female ratios at the workspace. Interestingly, Accenture, one of the organizations that we come across very often, is leading that space. And also the women diversity roles at the top management level is supposed to be around 30-35%. That is what they promise as an organization. And I think a lot of organizations today are following that path. So diversity and inclusion happens to be a very important social factor there. Aside to that, how are we treating our employees? Are we investing in trainings? Is there a POSH committee? I think every organization today more or less has a POSH committee, and there's a lot of stress coming in on those factors. Are we investing in upskilling our employees, right? Do we have happy employees? It is not just limited to business values anymore. I think traditionally where organizations focused a lot on creating only business value, only focused on numbers, revenue, etc. The organizations, investors are moving more towards these social pillars as well to create value. At the end of the day, it's important to create value because it helps your brand. So those are some of the factors that investors look at when they talk about investing in socially sensitive organizations. Also, what are the benefits that the employees are provided with? Do they have work-life balance? So interestingly, a lot of the fintech companies or the organizations in the BFSI space don't find it meaningful to invest in work-life balance. But trust me, that trend is changing, right? We see that more and more leaders, and then obviously it gets driven from top to bottom. But as a culture, organizations are moving more towards work-life balance, creating happy employees. So an initiative like a voice of internal customer. What is it that our internal customers ask for? That has become a very important part in guiding the organizations as principles towards creating a better environment for your employees in the workspace. Okay. I'll move to the governance pillar. So this largely refers to how an organization is led and managed. When we talk about led and managed, we talk about transparency. Is there enough transparency with stakeholders, with investors? Is there awareness? Now, while we talk about environmental factors and social factors, and they're good to hear, is there enough awareness on creating an environment which is conducive to all of these pillars? Do employees understand the importance of environment and social? Is it as critical to them as we talk? Do we walk the talk? And that is where governance plays a very important role. Do the board of directors and the executive management committees, how are their compensations structured? Are they lopsided? What are the performance bonuses that are granted to the employees vis-a-vis to the performance bonuses granted to the directors of the organization? Those are some of the governance factors. How are the anti-bribery policies? What are the policies on lobbying, etc., is something that we cover, that organizations want to cover in the governance pillar. Now, we'll go back a little to the history of ESG and how did it really evolve? How did it come into being? So is it a new term? No. It is not a very new term. It is about a decade old. Where it is getting driven from is the United Nations, where we had about 50 CEOs of financial institutions get together at the UN Global Compact and discuss about how to create ESG and sustainability within organizations. Now, the idea was to get creative and have it not just induced, but followed, right? So in 2005, there was an initiative that was Who Cares Wins, termed as ESG investing, which was coined for the first time. So largely, the questions that we are faced with is that how does the company manage the environment, its people, and its governance bodies? So those are some of the things, typically that we look at, that investors look at, that does the company own contaminated land? How does it dispose of its hazardous waste? How does it manage toxic emissions? And how does it comply with government environmental regulations? What is the attitude towards climate change? We talk a lot about climate change, but what is our contribution? Is the organization taking conscious steps to reverse all the climatic changes that are happening? So an interesting and important fact is that in the last 15 years, the temperature, so global warming being a fact, a reality that we all live with, but the temperatures have gone up by 1.5 degrees Celsius, which means that in our lifetime, while we are all working in the last 15, 20 years, the temperature has risen, and 2024 incidentally being one of the warmest and the hottest years in human civilization. So I think we are all witnessing all of these changes as we live. The attempt is not just to make it better for us, not just to recognize that how steps that we take towards green investments will help create a healthy environment for us. It is for the future generations. It is going to be for our children and for their children. So like we talk about becoming net emission free or zero net emissions by 2070. The European Union talks about becoming net emission zero by 2050. Now, that journey, so a lot of us would say, would we be there to see that time? We might not be there to see that time, but do we have it in us to make it better, to have it improvised for the generations ahead of us? Yes, absolutely we do, and I think that's a very, very critical movement that we should all be driven by. There is just absolutely no other way to change it in the way we do business, in the way we conduct ourselves in our day-to-day life, in our workspaces, in the teams that we operate, and I think those are some of the very critical factors that we need to start focusing now on. Now, some of the benefits of implementing ESG, like I said, that investors are becoming extremely cautious and wanting to understand what is the ESG evaluation and how does the organization score when it comes to ESG. In order for us, for any organization to reap those benefits, it's not just evaluation by the investors, but it's evaluation by the consumers like us, right? A very, very simple example is, I think all of us shop through H&M, and I think we're all aware of that movement where we are asked to use, some of our used clothes, we can give it back to H&M and they recycle it and then it comes back. So those are some of the organizations that are environmental friendly and are taking conscious steps to make sure that those efforts are happening and they're getting recognized. So benefits, coming back to benefits, is brand repetition. It typically talks about, so the way I spoke about H&M, I'm sure you have a couple of brands that you want to speak about and know about that are making a difference. So it helps boost the brand repetition, it helps attract the right kind of talent. So we've all worked with different organizations and we talk very fondly of some of them because of the practices, because of the learnings, the training programs that we have been a part of. And I was talking to one of my ex-colleagues about some of these practices during the break session, that how fondly I remember an organization that I worked for because of the upskilling, because of the training programs, the values that they hold as people, the leaders, right? So it attracts the right kind of talent. Obviously, it attracts more investments. When investors see that the ESG metrics or the ESG quotient of an organization is high, it automatically translates into better financial results. And that is a correlation, time and again, that has been proven and is visible in numbers, which gives the kind of confidence that investors need. Okay. And of course improves competitiveness and resilience. So some of the trends that I just spoke about was consumer behavior trends. And so typically, like I said, the generation today is more inclined towards people aged between 18 to 34, want to buy shares, want to invest in organizations that are ESG metric compliant. So I think I've made that point already. How to implement ESG in business, very interestingly, is just open up everything that you have with respect to your policies, your people, your compensations, your culture, etc. And then, relook at everything and say that, can this be more environmental friendly, people friendly, and more compliant legally, right? So that's how you implement ESG in business. So measuring each of these techniques now, I think, and reporting. So there are three ways of kind of reporting this. There is a third-party reporting platform which is being offered extensively. You have ESG consultants available who can help organizations become ESG compliant. There are voluntary disclosures that organizations are required to do, and there are own internal reporting processes. One of I would say, critical milestones that India has covered particularly is the BRSR framework, which is the business responsibility and the sustainability reporting. This was introduced by SEBI in May 2021. I think this is a landmark move to ensure that currently the top 1,000 companies and Nifty 50, which includes Nifty 50 companies as well, are required to report their BRSR framework, which is core to the way they do business. And I think it is only a matter of time that organizations will need to be ESG compliant and follow the BRSR code. And I think voluntarily organizations have to move in that direction because it's only a matter of time that this is going to get mandated for everyone who does business. So India commits to achieve net zero vision by 2070, like I said, but it will not happen without us taking those steps internally within our teams, within our governance mechanisms, and ensuring that it is followed in spirit. So the future of ESG is integrating it in the way that we do business, and I think that is something which should be not just a professional cause, but it is as much as a personal cause as well. So on that note, I think I'm delighted that I'm a part of an organization and have been part of organizations that are aligned to ESG in value and culture. Okay. Thank you, and on that note, I'll be open to any questions if at all.
Thank you so much, Ms. Dipakshi, and I would request you to please stay back on the stage. And to do the felicitation, I would request Mr. Anand Singh from Azendo to do the honors.